now we will going to discuss the second element of this chapter or second part of this chapter, which is known as corresponding accounting periods. We already learned that surrendering amount, how to calculate the amount of loss to be surrendered. We already knows now that how to find out the amount. If a company is accepting loss, what is the maximum amount we can accept, right or wrong?
Right.
Now, till now, whatever we did, whatever we learned, all the companies of the group have same accounting period. Means if the year end is 31st December for company A, B, C, D, all the members of the group have same accounting year. That's what we learned in our part 1. But here now, the corresponding accounting period means that all the group members have different accounting periods, different accounting year ends, and it happens in the market. It happens normal. So how to do this? We have to again focus accrual type counting the months on our fingers. This will be like you can say this type of thing is going to start now. If you see the question, please read the question.
Cup Limited is a wholly owned subsidiary of Sugar Limited.
And
Sugar Limited.
Sugar is a parent, right? And wholly owned, 100% holding. So group is formed. Group is there. Please continue.
Sugar Limited incurs a trading loss of £27,000 in its 9-month accounting period to 31st March 2022. Taxable total profits of Cup Limited are £24,000 and £38,000 for 12-month accounting periods to 30th September 2021 and 2022. State the maximum amount of group relief which Cup Limited can claim from Sugar Limited.
Cup Limited claim. Cup Limited has a profits, right? So Cup Limited can accept, right? The maximum group relief which we are going to calculate. The problem is Cup Limited has accounting year and Sugar Limited has accounting period. You can see the loss is for the period. If I write this period 9 months, no, 31st March 22, 9 months. When it started, can you tell me? Is it correct? July? Yes, hello?
Yeah, hello.
Yeah, is it correct that it starts from July and end 9 months in March?
Yeah.
Okay. Now Cup Limited has year end, right? Year end what? First year end is 30th September 21. Am I right?
Right.
What is the full form of this? Full form? Just we didn't do anything, just we open it. Just we write the full forms. Any confusion, please ask me. But this is simple. We have to find out the months only.
Okay.
Now tell me, this July till March, how many months fall in between here? Just match it. What you do, just match this with this. How many months are matching? How many months are matching? July 21, yes. July, August, September. How many months are matching over here?
3 months.
3 months. Now very carefully. What we are going to do? 1 second. Cup Limited, Sugar Limited. Sugar Limited can surrender. The loss is how much? 27,000. Am I right? This loss
Right.
is for how many months? 9 months. And how many months we matched just now?
3 months.
So what is the amount of loss Sugar can transfer over here?
9,000.
Okay, very good. What about Cup Limited can accept? Cup Limited has a profit. How much profit? 24,000.
24,000.
This profit is for year, for 12 months. And how many months we matched?
3 months.
3 months. So the answer is,
6,000.
and what we learned, the group relief is the amount which is higher off or lower off,
Lower.
which will be the final answer of this year, which is
6,000.
6,000. This how we can work if corresponding accounting period are there. Note it down. We have the second year as well. The second year end, we will do the same thing for that one as well. But first, note it down. Ask if you have any questions in your mind, then we will continue. Now you tried and you got 18,000, which is correct. But let us do it all together as well. Let me make space. Okay, second year is year ended 30th September 22, right? It's
Right.
from this to this. Okay, now Cup Limited can accept and Sugar Limited can surrender. But before moving forward, we have to find out this how many months match here. How many months are there? How many months are those which are completely matching?
6 months.
Sorry,
6 months.
6 months, correct. So all the working will be based on 6 months. Cup have profit of how much? 38,000
38,000.
for 12 months. So how much for 6 months?
19,000.
Okay, Cup can accept 19,000, but how much they can surrender? They have a loss of 27,000, which is for 9 months. And how much is for 6 months? You told me just now 18. So my group relief will be 18,000 in this situation. And we are done with the corresponding accounting period. I will share one more question. Please tell me the answer by your own, then we will solve it all together. Okay, so you did this one, right? White and black. For the first year, you told me how much? First year means year ended 30th September 21. What you got? Group relief. Give me the final answer.
For first year, it's 6,000.
Very good. What about the second year?
15,000.
Okay, 15 and 18 was the answer, and lower is 15. So that's it. So black and white. Very good. You did it correctly. So that's what we can say is the group relief. That is known as group relief. There is one which is capital gains group. I will tell you now. CGT. We know the capital gains tax, right or wrong? If a
Right.
capital loss occurs, if a capital loss occurs, group companies can share their capital losses between each other. Only the difference is formation of group. The difference is in formation of group. How? What is the difference? We will learn now. Okay, I will share a question. The topic name is now capital gains group. We know the group relief, which is a trading loss, group. Trading loss means if a company has trading losses, how they can share the losses between each other. That was we are done now. Now we will discuss the capital loss. Capital loss applies in CGT topic, in capital gains tax. Remember?
Yes.
Okay. So what is the difference? We will discuss with this example. I am sharing the example. First of all, tell me the requirement B. Requirement B, you knows by yourself now, that group relief group. Group relief group, we knows, we learned this B requirement, we learned. So for B, A is part of group, right? Because A is the main company. B, 75% holding. What you will say, yes or no?
Yes.
Yes, B. For C, what you will calculate? Effective holding. How much is coming?
56.25.
56 point something, yani 56%. No need, right or wrong?
Right.
And what about D? D is more far. So 0.75 into 0.75 into 0.75, what it will be? It will not be a part, but just for information we are solving.
42%.
So D is also not a part of this group. This is group number 1, right? There can be other groups as well, that B and C, these are group number 2. C and D, they are group number 3. This is known as what groups? Group relief groups. What they can share, what they are allowed to share, they are allowed to share their trading losses. What they are allowed to share, only their trading losses, not other than that. This is what we learned. The B requirement we knows. Any questions in the B requirement? Hello.
So only group 1 can share losses with each other, whereas B and C cannot.
See, A and B can share losses between each other. B and C can share the losses between each other, and C and D can share the losses between each other, because they are forming separate 75% groups. No, A is not a part of with C, because A don't have effective holding of 75% in C, right?
Okay.
So that's it for the group. Now capital gains group, everything will remain same, but the logic is little bit different. The direct holding percentage is 75%. The direct holding percentage is 75%. Same. Direct holding must be 75%, but effective, yani indirect holding is reduced. It's not 75% in the capital group, it's only 50%. This is the change. That is the change. For the trading losses group, or you can say group relief, the both percentages are 75, but here is different. So what will happen when we create a capital gains group? The difference will be this. A is there, okay, fine. B, B will be there because 75%. C, we will calculate how much you got, 56, no? So C will come or no?
No.
No, see, this C. C has direct or indirect?
Indirect.
Indirect percentage is now not 75. 75% is in group relief. But for the capital gains group, the indirect percentage is reduced to 50%. So C will be part of capital gains group. C will be part of capital gains group. Okay, D will not be part. Why? Because D, you told me just now 42% was there, no? 75 into 75 into 75. So for the sake of capital gains group, you can see C became part of capital gains group. Why? Because for the C, effective holding percentage is greater than 50%, and for the sake of capital gains group, indirect holding can be 50 or above. For the normal groups, which we already learned, normal group reliefs, both percentages, direct and indirect, are 75. But for the capital gains group, direct holding is same, 75. But indirect holding is reduced to 50%. That's what is known as capital gains group. Means A, B, and C, they are allowed to share their capital losses. Capital losses arises in the CGT chapter for the companies. After indexation allowance, if there is negative answer, it's known as capital loss. And A, B, and C are the group members for capital gains, and they are allowed to share their losses amongst each other. Please note it down and ask me if you have any questions. Now, the question in front of you is from your Kaplan revision kit. It's a big question. Please read it.
TEN Limited is the parent company for a group of companies. The group structure is as follows. 10 Limited 90% of 20 Limited, 20 Limited of 75% of 30 Limited, 30 Limited of 70% of 40 Limited.
Okay.
Each percentage holding represents a holding of the ordinary share capital, which group relation between 40 Limited and 10 Limited.
Okay. Each percentage holding
Okay.
ordinary shares. Yes, it should be ordinary shares, or it's a profit sharing percentage. Is it correct? Fine. Now the answer, the requirement is relationship between 40 and 10. 10, they are asking the relationship between 40 and 10, right or wrong? So we will check.
Right.
40 is the last one and 10 is the first one. So first of all, I will check the group relief group. Okay, what I am checking in the red color, group relief group. So 90% into 75% into 70%. Can you tell me the percentage? Indirect percentage.
47.25.
Sorry.
47.25.
Okay. For this one, the percentage, the benchmark is 75, right or wrong?
Right.
So there is no group relief. There is no group relief group. There is no group relief group, right or wrong? Now I will check with another
Right.
color, the capital relief group. Capital relief group, direct holding, DH, direct holding is 75 and indirect holding percentage is 50. Here you just told me we have 47. So here also no, no capital gains group exists. So what should be the answer?
D.
B or D?
D. They
D
do
for
not
duck.
form a group.
They do not form a group for either group relief or for chargeable gain purposes. This is from your revision kit. Any confusion in this question, please ask me. The next question again, sorry,
No question.
we just completed this chapter, okay? Now the next question from the revision kit. Tell me the answer. Computer. Okay, we have a computer limited. Very good. Computer owns 75% in share. 60. Oh, sorry. Shares 75% and 60% in bin, right? And 100% in paper. Paper owns 75% in cardboard. Okay, cardboard. All companies are UK residents except paper, which is not a UK residence. Not UK residents can form a group, right or wrong?
Yes.
Computer is okay, paper is okay, Paper will be forming the group. Chair is okay, bin is not okay. And this one, effective percentage, yani 100 into 75. 75 means cardboard is also okay. So the group is computer, paper, chair, and cardboard. Am I right or wrong?
Right.
What we learned, that they can share losses amongst each other, right?
Right.
The foreign company can be part of group, but is not allowed to share losses. You remember the question we did? Holland, Sheffield, and Birmingham.
Yes.
So, Chair Limited, yes, it can surrender loss. Bin, no. Paper, leave paper. Cardboard, yes. But paper is a part of group, but it cannot share losses. Why? Because paper is a foreign subsidiary or foreign company. Foreign company can be a part of group, but it cannot be allowed to share losses. So the answer is chair and cardboard. Any confusion, please?
No confusion.
The next question again from your revision kit again is a OT question. Uh, I'm sharing it here. Can you tell me the answer, please? See, the easiest way is to make the structure while reading the question as I am doing. A limited and then 75% he holds in B, 100% it holds in C, B holds 75% in D, and C holds 51% in E. Just make the structure and you will understand it very easy. What they ask you, group relief or CGT group or normal group?
Gains group.
Okay,
Capital
gain
gain.
means direct will be 75 and indirect will be 50. So first of all, you just calculate the indirect holding. Here is 56% and here will be 51%. So
Is it A?
why?
A has a direct. Okay.
A has a 75% in B. Okay, so
B.
B is okay, right?
And for D,
Greater
56%.
than 50% holding in D. Okay, fine. Okay. So, before disconnection, we were saying that A is okay, B is fine, C is fine, D is fine, and you can see E. E has 51%, right or wrong?
Right.
But do C and E have form group or no? Do they form normal relief group or no? Group relief. Do they have a group or no in between them? Or creating a loss group?
No.
No, they don't create a group, right? So a company, okay, we can write this, but the thing which is the last topic of this chapter, see the effective one, it's coming, yes, but we have this E, we are holding E via C, right or wrong? We are holding E via C, but C and E are not forming 75% group. So if this is the case, this company will be eliminated. Although it's 50%, although it's 50%, but there is a condition, a small rule, that both the companies via C we have, no? So C and E must form a group, 75% group, in order to take E in the capital gains group. And the requirement is except C. Except C, we have A, B, and D. So A is there, A is already there, A is here, A, C. They already told you A and C. So what left? The answer is B and D for this particular question. And in this question, we learned the last logic, which is only applies in chargeable gain group, that effective holding is okay 50%, but we have to check that in between we have C and E, they are forming 75% group or no. Otherwise, we will not take E as a part of chargeable or capital gains group. Any questions?
No question.
Okay, same type question we have here. Brazil, can you tell me the answer, please? What they ask you? Which group?
Capital gains.
Okay. So we have Brazil, which owns 100% of Germany, 75% of Holland, then Germany owns 65% of Belgium, and Holland owns Russia. Okay, 75% of Russia. Now, first of all, we know capital gains group direct is 75 and indirect is 50. And for 50, we have a rule as well. Okay, we will apply the rule. First, we will see that G and H, these both indirect companies, are they in 75% group or no? Hello?
Hello.
Yeah.
Yeah, Holland and Germany are the direct ones.
Okay, so Brazil will be there. We will take Brazil. We will take Germany. We will take Holland. Brazil is okay because Brazil is part. Germany is okay. Holland is okay. Now, indirect ones, percentage 75 into 75, 56, right? And
Right.
H and R, in between H and R are creating 75% group or no?
Yes.
So, Russia is okay. What about this? 165, okay, 65% is more than 50, but do Germany and Belgium are making a 75% group? No, they are not. So Belgium will not be part of capital gains group. This is a practice question of the concept which we learned in 246 OT question December 2016, and this is the revision kit question. Please note it down and ask me if you have any confusion, please.
Noted.
Okay. This is the last question from the kit. Just take it as an assignment and share the answer with me through WhatsApp. And this chapter is completed and we did the kit as well. Okay.